dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
And you're back on Liberty Nation Radio. I remain your host, Mark Angelides. We're continuing our conversation with Andrew Moran, Liberty Nation's Economics Affairs Editor. Thanks for sticking around, Andrew. Now, you have a show on libertynation.com and, of course, YouTube, Rumble, we're on them all. And, of course, you can pick us up on Amazon Fire or Roku, all these places. But your show is called Swamponomics, and it's been running for a good few years now, and it's fantastic. It's nice, short, bite-sized bits of economics news for the masses that even I can understand, and I'm very grateful for it. But a recent one you did was talking about the death of the U.S. dollar and how such proclamations may be overstated. Could you give us the general layup of that?
Yeah, so if you look at the U.S. dollar since Trump's election, it's been on a steady decline, about 11%. And a lot of people have attributed to, there's an anti-America trade going on in the global financial markets. Others say, the de-dollarization that we've often talked about over the past decade has contributed to it. But then something happened, and Trump nominated Kevin Warsh to be head of the Federal Reserve. And then suddenly out of nowhere, the U.S. dollar started improving, went up about 1.5% in the week of Trump's announcement. And so that led me to question, if the death of the dollar has been greatly exaggerated. And, a lot of the stuff that Kevin Warsh has proposed as head of the Federal Reserve is bullish for the U.S. dollar. It's quite hawkish. But at the same time, it contrasts with the administration's economic agenda, especially when it comes to trade. But overall, the U.S. dollar has fared well in the days after Trump's announcement.
But is that a stable position, or is it perhaps does the U.S. dollar wanders around the salons of America and Europe and the oil countries, but then in the attic there's a portrait of an old greenback getting Dorian grayed on that situation. What is it? Is it is the 1.5% rebound? Is it just some kind of dead cat bounce equivalent, or what's happening?
Well, I think you're conflating the two issues. One is so in global financial markets, U.S. dollar rally. So the U.S. dollar index, it's an index that weighs the U.S. dollar against a basket of currencies.
Sure.
Canadian dollar, British pound, Japanese yen. The administration likes to trade weighted nominal index. That index trades the U.S. dollar against its major U.S. trading partners. And so those are two different things. Now the other issue is when it comes to this dollar hegemony in global international reserve system. So U.S. central banks will hold U.S. dollars in a basket of other assets. So in recent years,
a basket of deplorable assets, right?
Yeah, sure. Except gold. Central banks in the last 10, 15 years, they've been steadily increasing their holdings of gold as part of diversification efforts to diversify from not just focusing on the U.S. dollar, but having a nice wide array of goods within their systems to protect either against inflation or global economic uncertainty or geopolitical tensions or domestic crisis. A lot of those central banks that have political upheaval, they tend to diversify into gold to protect the regimes.
Yes, speaking of the precious metal markets, there's a lot happening there, isn't there? And I wonder if the price shifts here are going to have a wider impact economically.
Well, yeah, of course. Especially so if you're mining, if you're selling an ounce of silver for $75 or $80 an ounce, that's going to weigh into the broader economy. When you have a commodity super cycle, then that stuff filters through the U.S. marketplace and it becomes expensive over time. Let's just use an elementary example of chocolate or cocoa. Cocoa futures, that thing went up, I think it was like 100% a couple of years ago. And you saw the price increases of cocoa, which was, I think, $11,000, $12,000 per metric ton because of Ivory Coast and Ghana and their growing conditions, or deteriorating growing conditions, say. That eventually filtered into the confectionery market, and you saw higher candy bar prices during the Halloween of 2025. But now prices have come down, so hopefully you see lower prices in the coming months. But that's just an example of how when commodity prices rise, it filters out the broader U.S. marketplace, consumers have to pay higher prices, of course. But one reason why silver or industrial metals rose as much as they did, those because of strengthening demand, particularly during the AI build out, because a lot of these data centers or robotics or tech, they require palladium, platinum, and silver. Gold is a different case though, because it has both the properties of investor demand and industrial. And of course, the weaker dollar facilitated the growth of these metals over the past.
And so let's get back to the death of the dollar. We went a little bit off track.
I went on a tangent about metals. Don't get me started about metals.
That's all. You also went off on a tangent about cocoa futures, whereas I know at least a couple of our listeners would like to hear about frozen orange juice concentrates. Trading Places with Eddie Murphy and Dan Aykroyd.
Well, there's actually a bear market now, the orange juice futures market. That went up dramatically last year, or no, 2 years ago. But then it reached a peak because despite its meteoric ascent in the orange juice futures market, it didn't reach a level that the futures market wanted. So a lot of these hedge funds, they sold for positions, and then it just the prices collapsed. So that was a really interesting turn of events in the OG market.
You're getting every piece of information you never knew you needed here. Back to the death of the dollar. Again, Andrew, and I always seem to be asking you this question: what does a dollar rebound mean for everyday Americans? I'm not talking about those who are heavily invested in the stock market, but maybe they have like 50% of Americans have like some kind of 401k. But they're partially invested in that they're not doing wild currency transactions overseas. What does it mean for them?
Well, yeah, I mean, you have a stronger purchasing power. One of the things that the U.S. has really banked on over the years has been cheap imports. So when you have a stronger U.S. dollar compared to, let's say, a South Korean won or a South African rand, you can import a lot of goods at a far cheaper price. But now but over the past year, it's been the exact opposite, whereby U.S. exports have been cheaper for foreign markets because their currency have strengthened against the U.S. dollar. So being able to buy foreign goods is one of the benefits for everyday consumers. If the U.S. dollar strengthens against the euro, it's cheaper for travelers to visit Paris or visit you in London. Those are some benefits.
I don't live in London, but they're welcome to go there.
Well, a couple of hours away. But to talk about the administration's asked repeatedly, do you support a strong dollar policy? And they tend to give a double-sided answer, because on the one hand, they want the strength of the U.S. dollar in the global economy. Because if you have the dollar hegemony, if you have King Dollar on its throne permanently, then you really control the world order, because everyone needs dollars. I mean, if the dollar collapses, the rest of the world will collapse too, because they hold so much U.S. dollars. Even China. I mean, China's been lowering its holdings of U.S. dollars in its foreign exchange assets. But if suddenly the U.S. Treasuries tanked or the U.S. dollar tanked, they'd be in a world of hurt. But at the same time, they want that weak dollar to facilitate that trade agenda, to rebalance global trade and ensure the rest of the world become the customers, and the United States is the leading producer.
Well, I think that's pretty much where I'm not going to for a moment suggest that it might be a good idea for Donald Trump to tank the dollar in terms of setting up the U.S. as a chief exporter. But as I say, stranger things do happen. Andrew Moran, thanks for joining us.
Thank you.
And that's all we have time for on this week's edition of Liberty Nation Radio, heard coast to coast on the Radio America Network. I've been your host, Mark Angelides. I'd like to take a moment to thank our guests for today. You are appreciated, and to thank you, the audience at home, who takes the time each week to tune in and join us here on the Radio America Network. We're very grateful to have you. Please remember, Liberty Nation does not endorse candidates, campaigns, or legislation, and this presentation is no endorsement.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.